This video is to be used for educational purposes only and is not intended to replace individual research or licensed investment advice. Unique experiences and past performance does not guarantee future results. Trading stocks, options, and spot currencies involves substantial risk, and there's always the potential for loss. Your trading results may vary. No representations are being made that any software or training will guarantee profits or not result in losses from trading. This is the JDfn Forex Report.
Good afternoon, traders. I'm Scott Norris here with your Forex Report. Today is Friday, August 7th, 2009. Well, we ended a rather dull week with a bit of excitement in the Forex and other capital markets after the U.S. and Canada reported July jobs reports today. The 7 a.m. report from Canada had a big impact on dollar-CAD, but the move was short-lived and did not affect other currency pairs. Heading into the 8:30 U.S. report, most of the majors were flat and hovering just off multi-month lows for the buck. When a better-than-expected non-farm payrolls number crossed the wires, traders quickly sold the dollar as stocks rallied. The knee-jerk reaction was not a surprise to us, as this correlation has become very consistent. However, traders reassessed the situation and decided that the dollar deserved some support as the U.S. shows signs it may be the first major economy to recover. The buck charged back and looks to end the day in positive territory against most of its counterparts. The big question is whether the resilience will carry forward into next week's open. It was only a month or two ago that we saw this same scenario. The non-farm payrolls report was not as bad as expected, and the dollar rallied alongside stocks. Of course, that was a flash in the pan, and the buck has since dropped considerably. We now stand in a little different light, however. First, the dollar is significantly lower now, which makes it a less attractive short from the current levels. Secondly, the payrolls today were only minus 247,000, a far cry from the last better-than-expected report that was still more than 500,000 job losses. So, perhaps this time the dollar's rally has legs. The most vulnerable of the buck's counterparts, as long as stocks remain healthy, are the low-yielding currencies such as the yen and the franc. Higher-yielding Aussie and Kiwi seem to be taking today's news in stride. We expect this has awoken the market a bit, and next week should be much more exciting than the last 5 days. Till Monday, have a great weekend and take care.